Hello, everybody. Welcome back. And I want to take a look at some things going on in the market. So, crude oil is down. I'll talk about that. And if crude oil is down, it's going to pull on the market, and the market will go down. And just looking right here, a pairs trade that I wanted to play for a sector rotation was short the financials and long the utilities. So the utilities they get beaten down earlier, not as much as the other areas in the market, but during the market crash, they did get beaten down, but they're basically back up right now. And the utilities are more so a safe haven. And so I want to be long those right there. They tend to be giving a good yield, and I think is more attractive than all the risk on assets. So I want to be long the utilities in a pairs trade and the same notional value as your long the XLU. You can go on to XLF and you can be short this, and clearly you see how this one right here has been the weakest on a relative basis. And we've been talking about this for months and months and months, that the financial sector is really weak due to the fact that they are the ones who are carrying the bonds. Anytime a company sends out a bond, it usually goes to the bank. The bank is usually the one that the investment bank usually takes the bond, and they usually try to do a roadshow. Same thing with IPOs. They usually try to do a roadshow, show other people or show other institutional investors or sophisticated investors what they have to offer and sell the products to them. But it all goes through the banks. It all goes through the financial sector. And this is why they're doing weak, is because they were holding bonds from companies in the oil sector. And this is a simple reason why the financials are doing weak. And then on the other hand, these right here, the XLF. The XLF is international financial, it's the large cap. But the way I wanted to play this is go long XLU, 50% of the notional value, and then the other 50% of the notional value of the trade, I want to go short KRE. Now KRE is even weaker than XLF. KRE is all the small cap regional banks. And if you look at KRE actually, you see that the last time it was at a record high was all the way back in June of 2018. For a long time now, it has been weak and never recovered from this crash right here. It just went sideways, maybe went up a little bit, but then came straight down. It never recovered. It is relatively weak compared to everything else. And so I would be looking to short that. If we actually go out 1 week, we can actually see that right now it's even lower than where it used to be in 2006. So you could have put money in this in 2006 and you could still be losing a tremendous amount right now. You could still be down almost 50% right now. So clearly a very weak sector, never even recovered from subprime mortgage bubble. This is the sector that you want to be short if you're going to bet on a risk off appetite in the market. So I would want to be long the utilities and short the financial sector in a pairs trade. So I have that right there. What I was thinking of also doing was that the market went up way too quick, so I was looking to get some bearish bets in there. And usually after the market goes up more than 5% in 2 weeks, you can go in and do a put calendar spread, one strike out of the money. But those put calendar spreads are more so if the market stays flat or if the market is slightly bearish. But if you really want to bet on the market going bearish, of course you can just buy puts, that's expensive. So instead, after I saw the news that came out about oil, I knew the market was going to go down. So now what we're looking for is on SPY, go a couple months out and buy a slightly in the money put, a couple months out, like 5 months out, and then sell a pretty far out of the money put on that expires in just a couple of days, and do a put diagonal spread and bet on the market going down based off of that. Because I do think that we did go above 50% retracement. We might have a bit of a pullback now. So on SPY or SPX or an index of your choice, you can also choose the NDX. The RUT is a bit weaker. You can choose to do it on that. Choose to do it on a specific sector if you want. Maybe the Dow Jones, Dow Transports are also relatively weak. It's similar to the financials. If you would have invested in Dow Transports, you basically would have been flat the last 5 years. So I would be looking at those sectors right there too. As for what's going on in continuation plays, so for continuation plays, let's look at U.S. oil. So looking at U.S. oil, another bearish day. And U.S. oil is down about almost 40% to $11 a barrel. And This is probably the low point for decades and decades on end. And many people are saying that this is a buying opportunity, that even if it goes lower, it's still going to come back at some point to $11. Here's the thing, though, and we've been talking about this, is that it is in deep, deep contango. The front month, um, the front month for oil is at $11. The back month for oil is at $22. You have to pay a 100% premium just for the difference between those two futures. This is in super contango. It is a record contango, and normally you would have to pay a penny maybe to go and flip it 1 month out. Now, to flip it 1 month out, you have to pay a 100% premium. You had to basically pay $11, and we've been saying for a long time that that's going to happen, but it seems to be getting wider, wider, and wider. And we've been very bearish on oil over here. And just a play I talked about less than a week ago was I've talked about the super contango for quite a while, but many people who may not want to risk such a big size on the futures market, or may not want something that has a potential for a very large loss, they might want to use a crude oil tanker stock. And so we talked about those. Let's see. So one of them that we had was Nat, and this one I expect it to be up quite a lot today. The storage costs for oil are going up. And this is another one we had, and we actually bought calls on this one. We said there was going to be a breakout, it's going to be an upside breakout. We bought calls on this, said it would be a 10-bagger trade. I actually now feel like that 10-bagger trade could really easily turn into a 30-bagger trade, and that we could easily see a 30-bagger over here. Again, that's all speculation at this point. But we had trades on those two. The Nat trade was more conservative. It was lower risk, lower reward, but that one I think is going to be very profitable. And we have our EURN, Euro NAV trade. We bought calls on those. Those are fairly far out of the money, but at the same time, higher risk, higher reward. And we're looking at those right there. And the trade that we made, I shouldn't say it was higher risk, higher reward. We risked a small amount, but our probabilities were very low of making money. But the reward was infinite. And so right here, I do think that 10-bagger could now actually turn to a 30-bagger. So just looking at those things right there. But if oil storage costs are going up, they already said they can make 100% plus EPS. I think that seeing how storage costs are right now, this company could easily be making 300% EPS. So that trade is definitely going well right there. And that's why, again, as I said, you want to follow along with the trades that we do here. Of course, risk an amount that you're willing to lose, but follow along with what we're talking about over here, because we've been bearish on oil for, I think, over a month now. And we've been talking about the spread widening for over a month now. And these sorts of trades are paying off, and EuroNav is basically expecting hundreds of percent EPS, and that basically means that the stock itself could actually become 10-bagger. Not even our trade, not even our call options. Our call options could possibly become, 20, 30, 40 baggers at this point, from the way crude oil is going down, from the way storage costs are going up, and the spread between those futures is widening. But these guys are basically short those futures because they're storing the oil, and so I'd be looking for a continuation play right there. Just keep on holding those. If it goes up more than 10 times very quickly, then just sell half them off to lock in some profits, and then keep the other half till the trend subsides. So other than that, just keep in mind, put diagonal spreads on SPY or SPX, however you really want to do it. You can also use S&P 100, you can use small cap indexes, whatever you really want to do. But I'm looking for put diagonals, make money from the vol expansion, and also on some downside right there. And also pairs trades long the utilities, XLU, short the financials, KRE. You can also short the financials through XLF, whichever one you think is going to be weaker. I think KRE is going to be weaker. And right here, just continuation plays. Keep on doing, the short oil. We've been talking about that ever since, it went up on the news that OPEC was going to cut. We basically said it's going to be buying the rumors, selling the fact. Cuts aren't going to make a big deal. And we basically said, go in there, use that as an opportunity to short. The market is acting irrational. And if you guys did that, you guys would have been very profitable by now. But continue everything that's been going on right there. And also remember the S&P 500 is reaching an important fib retracement level. Keep that in mind. See if it retraces right there. Other than that, if you guys have any questions, this is a quick video. But if you have any questions, just go ahead and ask me. And other than that, I will keep you updated. Thanks for watching. Happy trading.